Traders at Axis Bank say the bond market is witnessing sustained buying interest across all maturities, with emphasis on the long-dated maturities such as the 2053 paper. Now, for the T-bill side, demand is seen on the 24th October 2024 bill. Now, Kinskin Ukeje, Treasury Team Member at Axis Bank, joins me now for a weekly wrap-up of activities. Kinskin, thank you so much for joining us on the show today, and good to catch you. We're already in the holiday season, but take us through the highlights of market activities from Wednesday's primary market auction, and also investors trying to fill their bids, and a whole lot more has played out looking at the activities at the bond and T-bill side.
Yeah, thank you very much for having me. For the week, earlier in the week, it has been a very liquid week. Starting the week, we started at 190 billion liquidity in the market, and we saw that liquidity grow up to about 644 billion on Wednesday. And you saw that's pre the auction, and after that we saw the CBN conduct the CRO maintenance debit and taking liquidity from the market. On Wednesday, which was on the auction day for the NTB, we saw the DMO offer 104 billion naira, and we saw an oversubscription in that auction to the tune of about 1.7 trillion naira in that market. However, we saw the DMO over allocate down what was planned on the offer, and we saw them sell 604 billion in the market. This is to keep the rates at the levels which they are. And we saw the 91 days close at 9, the 182 days at 13%, and the 364 days close at 15.75 levels in the market here this week. Post the auction, we've seen a bullish rally in the fixed income space. We've seen the long end of the Treasury bills currently trading at 13.4 as a close of market yesterday, and we expect that rally to be sustained in the market today, even with a lower intensity. For the bullish, for the bond markets, we've seen it trade on a bullish note, even though we saw that cautious trading pre the auction, but currently we are seeing a very healthy two-way quote trading on the long end of the curve, especially the 53s, which we currently see trading at 17.75 levels. For the FS market, we still see demand continuing to outweigh supply. However, we've seen a healthy turnover in the market, averaging $122 million per day since this week. The range of trades have been typically between the 800 levels. Yesterday, we saw the NAFEX close at 860.07 naira to the dollar, and the NAFEM market, which is the trading rate, closed at 840.07.
And in terms of what to expect come next week as well, investors are also taking position ahead of next Monday's 360 billion naira bond auction. Let's talk us through what to expect come next week aside the bond auction.
Yeah, we saw an oversubscription in the NTB. We do expect high subscription and interest in the bond auction coming up also, and we expect it to close at high levels. Our guidance is still around the 17% levels.
And when we're also looking at, I like the fact that you had earlier hinted about the thinning liquidity as well for you as we are inching closer into the end of the year as well. How do you see that going? And even for the FX market as well, the pendulum swing, the up and down volatility cannot be predicted how things are going to go. But for you, in terms of the spread, how do you see things across different scenarios?
Yeah, for the FX market, in terms of the trading range, we'll still see it trade wide between the 700 and the 1000s levels. However, as we approach the end of the year, we could see the activity in the Forex market thin out as organizations close out for the year.
Okay, Kinskin, thank you so much for speaking with us. It's been a pleasure speaking with you today.
Thank you for having me.
That was Kinskin Ukeje, Treasury Team Member at Axis Bank.